Good evening, everybody. Thank you for being here. Amit, a lot of people in the chat are regulars and they're here. It's great to see them. How are you?
I'm doing great. How are you?
You know, I may be a little full, but I'm doing good. Before we get into everything, let's take a moment, everybody, and read the disclaimer. We are not financial advisors. We have no idea what your situation is. Everything we talk about is our own opinion. Please take everything with a grain of salt and do your due diligence. With that being said, Amit, I may have reached my limit tonight.
On food?
Now, you know I can put back food.
I know.
The amount of food that was ate tonight, it was ridiculous.
Well, here's the more important question. Did you also have lunch and breakfast?
So I had, I guess you would consider it brunch, I guess.
Was it heavy brunch?
Yeah, I had a sandwich. I was busy today, but dinner was incredible.
Because usually I can have a big dinner if I don't eat anything during the day. But if I have food during the day and then I have a big dinner, it's hard.
And the crazy part, so it was an incredible dinner. It's my favorite restaurant in the city. It's a private club. And we're walking out and we're on the third floor of it. And we're walking out through the first floor. And the first floor is its own restaurant. And there's 5 of us. All you hear is, Fiorillo, what are you doing here? And I turn around, it's a bunch of people I know. And the restaurant stopped because nobody knew what the hell was going on. There's about 50 people downstairs. It was wild. So I guess a couple of my buddies happen to be members there that I haven't talked to in like a year. It was a pretty interesting scene.
That's cool though. You got to seem like the guy to your friends.
It was pretty interesting. And the funniest part is my buddies are members of a lot of places. And I'm like, so your new office is about 4 blocks away. And I'm like, of course you're here. I'm like, let me guess, you guys are they're like, we're the member guys. We're members everywhere. They are freaking great. They'll give you the shirt off their back. They are phenomenal people.
I need to join these exclusive clubs in New York.
But look, so I'll give you the lowdown on what they do. So I'm not going to say who they are, what their business is, but they used to join a country club for 2 or 3 years and then exit and join a different country club just to build up their Rolodex of people and build up their network. And I think that they've been members at probably 4 or 5 different country clubs. And they're members at different private food establishments. Like their whole thing is network. And they spend a good amount of money doing it. But I would say, not knowing what their business does, I have an idea what it probably does. They have parlayed that into such a thriving business. It's really, a lot of it is who you know and who your network is.
Yeah. No, that's true. And, it's always who you know, not what you know when it comes to a lot of this stuff. But that opens up more opportunities to just...
I told you should start playing golf.
I would love to. I would actually love to.
I think you'd enjoy it. You can do it during the day between your 2 streams. I think you'd actually enjoy it.
Yeah, again, I've never played it before outside of like a couple of mini golf like simulations, but I think it would be fun to do it. Also, you get to meet really cool people in golf.
Yeah.
Right.
Well, yeah, I mean, think about it. Josh. We don't say where, but I mean, Josh is a member somewhere.
Yeah.
Like there's a lot of people that are members places.
That is true.
I think you should get into it. Anyway, I've been thinking about something.
Amit in golf pants. Yeah, I need to. I don't know what that would look like.
So before I go on that thought, I want to know who Matt Hollis is.
Matt Hollis is a guy who's using AI correctly.
Okay. So whatever he made today, okay, I just saw it before this. All my neighbors probably heard me laughing as the window's open. Whatever he made today, that's 2 minutes and 43 seconds with our voices, is incredible.
It's the best thing in the world. He's utilizing AI and prompting it in a way to make it contextual to the memes of this community, which is why Google's spending $200 billion a year on capex.
Matt Hollis, if you're watching, I salute you.
I think this Matt Hollis guy is actually going to be at the LA meetup because he emailed me. So
I want to meet Matt Hollis at the LA meetup.
Yeah, it'll be fun. He's a cool guy.
Hilarious and phenomenal. You know what? I'm still feeling.
There he is, Hollis from Hollywood.
Oh, he's here?
Well, definitely be at the LA meetup then. Hollis from Hollywood. There you go.
Hollis from Hollywood, I salute you, sir. Keep doing what you're doing. It is freaking hilarious.
Matt Hollis made me close my short on Micron. Yeah, you can't be short any of the semiconductor names when you see what AI can produce.
So I'm feeling a little left out, Amit.
I already know what conference. All right, this is the first topic. Let's get into
it. We're just going to get into the first topic, then we'll get into my thoughts about some other things and your thoughts about some other things. But I'm feeling left out. I haven't gotten blocked and I haven't gotten responded to. Feeling a little left out.
You wrote such a great post too.
I legitimately don't think he read it. And if he read it, he just was like, I'm not getting into an argument with this guy because he's not going to stop.
I think you need to just respond to every post he has with your long post. Eventually he will see it because apparently the guy sees a lot of stuff because he's blocked everyone who has any meaningful pushback against. But like, dude, Karp had a really good quote once, which was just like, you don't want to engage if you don't want to listen to my answer.
Yeah.
You know, I mean, blocking people is unless they are spamming or harassing you. The block button is used to spam and harass people. It's not to stop people from speaking against what you're saying, especially when they're actually trying to thoughtfully engage. Like, I guess some people putting memes at him, whatever, you can block them. But for someone that's like meaningfully engaging and they block you, it's like, okay, you obviously don't care.
Well, you put it out on a public forum and then I respond. And it's not like I just responded with 2 or 3 sentences. I was spitting a lot of facts. I went through why it makes sense for Palantir to classify the FDEs in R&D rather than cost of goods, COGS. And, I went through everything. I wanted to have an intellectual conversation with the guy about it, and I don't think he wants to have one.
I think he's loving the attention. I think he's loving the juicy subscription revenue. I think look, the thing about Michael Burry is he's looking for the next big short. I think one thing that's annoying him, what I've realized is people keep commenting, guy got one thing right in 2008. Now he thinks he's like the biggest investing genius. And he usually responds to those people with some snarky response. I think he's eager to show people he's gotten more than one thing right. And in reality, like the one thing everyone knows him for is the 2008 financial crisis. It's been 17 years. I think he's looking to make Palantir as his next big short and to be right about the stock going to $50. And that's why he's pushing the narrative so much.
You know what, though? Nobody can take that away from him. And he's a legend for it. He deserves all the respect in the world. He went against everybody. He went against something that, maybe 5 people actually shorted?
Yeah.
So he's a legend. He deserves all the respect for that. But at the same time, regardless if I respect you for your call and regardless if I think you're intelligent, going on a public forum and starting, like, I didn't start this. He started with those things. And I just don't think he wants to respond, which doesn't make sense.
Dude has blocked more people than the U.S. border year to date. That's crazy. Oh my gosh.
And look, I am annoyed that what you said was very true. Why would you expect Karp to fly private? I mean, fly freaking public. Why would you expect that?
I've had multiple discussions today. I was telling Chris this with people that are very close to C-suite executives. And I hit them up. I knew a few of them. And I said, what do you think of what Burry said? Like, am I missing something? Is he right to complain? And they were just like, I mean, they didn't have the words to explain how unbelievably stupid it is, because these people have been on private jets with the CEOs. They've seen these deals get done. They've traveled around the world. It's a 0.00001% of the overall free cash flow that Palantir is doing. Like, it's not even a concern, which is why I think he's rage baiting everybody. Like, I really do think that's what he's going for now. And I kind of don't want to feed into it anymore, because he knows it's effective if people get upset about it.
Right. The problem I have with it is a typical annual hours. We know CARB doesn't work typical hours, but 2040, I believe, is it, or it's 2140, whatever it is, something like that is what your typical hours is, or whatever. It's just over 2,000 hours a year. So let's say CARB's working 12-hour days. Okay, he's putting in an extra 4 hours a day because you got to sleep, eat, et cetera, et cetera. If he's flying to Europe, if he's flying around, do we really want him wasting 10% of his time in airports?
No, obviously. I mean,
it's one of the dumbest things to critique. Now, if this company was losing money and still losing money, okay, maybe you have a point, but this company just did $2.1 billion in free cash flow. To say that spending $17.6 million on private airfare is a waste of money when the guy just signed 680 deals worth 1 million or more. I mean, I think it's intellectually incorrect to even start going down that road.
Yeah, and again, a lot of people brought up today, Palantir doesn't have a sales force.
Right.
It's literally CARB closing deals. So, I mean, if you got to pay 17, if you were going to pay 17 million to a bunch of people cold calling, you'd rather pay 17 million to a private jet to actually get real revenue coming through the door. So, look, I think he's rage baiting everybody. The thing about this whole Burry thing now is if Palantir stock goes down substantially, so it would have to be cut in half from here, Burry will seem like the biggest genius in the world for calling this. And I don't think you, me, whatever videos, analysis we put out can play any meaningful impact or role on Palantir stock going down. Quite frankly, I don't even think Palantir can actually control their stock going up or down. They can keep executing on earnings, which I think is a given, but they're not going to control the macro environment. And I think Palantir will be determined by the macro environment. Unless Palantir royally messes up this year on earnings, which I just struggle to see happening, it's going to be macro. So either Burry's going to be right about Nvidia, Palantir, and AI being a bubble, and that's what collapses it, or he's going to be dead wrong, and those stocks will probably get closer to all-time highs by the end of the year.
The stock and the business are two different things. And Palantir trades at a stretched multiple. We all know that. From a business, it's one of the most incredible businesses ever built. Did it take 2 decades? Yes. But that doesn't change the facts of today, that when you go back and look at that quarter, it is one of the most incredible businesses ever built. Now, does it go back? And I'm going to give my thoughts in a minute. You give your thoughts. Do you think Palantir or Hood will retain all-time highs this year?
I think it's really based on macro. I think it's possible, but we've got to get through this. We'll talk about, we got to get through the SaaS stuff. We got to get through the Fed rate cuts. If we can get through all that and put up really good earnings and get super bullish again, yes. If not, it's going to be tough for them to easily get back there soon.
I think if two things have to happen. For Hood, we need a combination of rate cuts and crypto to come back,
which is harder for Hood.
Which is harder, in my opinion.
Yeah.
For Palantir, we need them to blow earnings out at least the next 2 quarters to even have a chance at blowing past 210.
Yeah, and again, Palantir doesn't get to 210 by its. This is the part I keep trying to hammer home. Palantir doesn't get to 210 or 200 or 180 by itself. The market's got to move.
Yeah, the market's got to rip.
So it's not about Palantir getting back to. It's about, can Nvidia get to 220? Can the S&P get to 7,200? If that doesn't happen, I'm just learning more and more and more. You talk about this. I'm learning more and more as I'm observing patterns and charts. The stock market is controlled by algorithms.
Yeah,
they bottom and top. They bottom and top at the same time. There's going to be a lot of divergent nuances between different names that have a catalyst, like AppLovin today after hours. That's why it's up 7%. But the majority of the market, the names that matter, the 50 names that matter, they go up and down at the same time. And so if Palantir goes up, it's because the market's going to go up. If Palantir goes down, it's because they messed up on earnings. I just think given the guidance they have, it's very hard to imagine they're going to mess up on earnings.
Yeah, I think Palantir is going to beat every quarter, but Palantir can't miss guidance. That's more important than the macro for Palantir. They miss guidance. It's going to give the bears a lot of fuel, and it's going to give the algorithms a lot of power to the downside. So Palantir can't miss. I'm not expecting them to miss. I'm expecting them to blow earnings out of the water from what I saw this quarter.
Yeah, and again, for them to miss it, they can't. Robinhood missed because the business is cyclical with the market, so the analysts got too greedy about the revenue expect. For Palantir, it's a SaaS company, so it's very predictable. As long as Palantir is better than what the analysts predict, not because the market's up or down, which they've done literally for almost 12 quarters in a row, they're going to be fine. So I don't think it'll be Palantir's fault if they fall. I think it's going to be macro.
Yeah. So I have a Palantir article coming out, I think, at 8 a.m. tomorrow on Seeking Alpha. So I'll link it whenever I post. It is, I'll tell you right now, it is posting at 8 a.m. tomorrow, Seeking Alpha. It was an incredible quarter, incredible year, incredible company. So we'll see. I want to get your thoughts on something. So I was doing a lot of thinking about this, and I saw the news about Netflix that they have the cash to raise the bid for Warner Brothers Discovery. Now, with what we're seeing from Hollis, from what we're seeing from the Brad Pitt versus Tom Cruise fight that's on X.
Yeah.
Do we even think that these assets are really worth what they're worth, what they're willing to pay? Do we think that, as I start going down the rabbit hole of what other independent studios out there that you can invest in? Because if Warner Brothers gets this valuation, theoretically, should it bring the other ones up like Lionsgate? And then I started thinking about it like, with where AI is today, in a year from now, we're just going to be prompting our own shows.
I don't think we're there yet. Prompting your own show seems like it's going to cost the company a lot of money that's producing the AI for you, which means we're going to have to pay something, right? Whether it's $20 a month, $30, like that's a lot of compute to be like, I want a show about blah, blah, blah. Like, I don't think people are willing to pay for that yet. I don't think the AI is good enough yet. I do think at the end of the day, like you need human creativity to make really good content. Like I don't know how good that. Maybe when we get to AGI, it can come up with a show that's actually interesting. But like these short little meme videos are fine, but a season of 8 episodes, 40 minutes each, like I don't know if AI is ready for that.
Yeah, I'm not saying today. I'm just saying if we have this now, and if this is going to get infinitely better, where are we in a year? Maybe a year is not enough time, but where are we in 2 or 3 years? And at what point does content being king with Sopranos and everything else, at what point does it not matter anymore? Because you already know what you like.
Yeah.
You know what I mean? Like if you've seen 20 mob movies and you like mob movies, or you've seen 20 action movies and you've seen action movies, or you see 20 love story movies, right? You know what your general interests are. And you think about how in depth you can make these prompts on Claude and have it spit all these financial stuff out. At what point do you think we get to something where they can make a 30-minute show for you?
Well, again, I think YouTube has already kind of commoditized premium content to an extent because you know what you love. And then YouTube, although it's user-generated content, not AI content, algorithmically finds what you love and puts it in front of your face, which takes away a lot of attention, in my opinion, from Netflix and HBO. At least for me, I've noticed like when I really can't find something to watch, it's YouTube that gets me something. Yeah, I think there's a world in which your AI version of YouTube just prompts something for you. I don't know how many years away it is, but it is an important discussion to say, is Warner Brothers still worth what it's worth? Now, again, their assets are timeless, right? Like Harry Potter is timeless. So I understand why Netflix is eager to pay the premium for it. But yeah, there is a world where entertainment just becomes AI driven.
And I know from a personal standpoint, in 5 or 10 years from now, I will still at some point go back and rewatch scenes from The Sopranos or rewatch episodes of Entourage or Big Bang Theory. I know that that's going to happen because I love those shows. And it's just something that I'm going to pay for, and I'm fine paying for it. But I just don't know what these assets are really worth anymore, because I think the AI is going to be so prolific in this that I'm having a hard time believing that Warner Brothers is actually going to be worth this to Netflix going forward, or Netflix should be a $300 billion company if we're going to be able to create content on our own. And that's not tomorrow, but it is in the future.
Well, it depends, right? Netflix is valued on revenue from subscriber growth outside of the advertising business. Do we think people will meaningfully stop subscribing if there is an AI alternative? Or more optimistically, do we think Netflix will build in their own AI alternative and let you prompt and charge you an extra $10 a month?
So I think what's going to happen, you're going to see it with Google first or Grok, where for $25 a month, you can do a prompt and get videos of content. And then I think we're going to see Netflix add a power user tier where it'll let you use the AI to change things. If you didn't like an ending, that's probably where it'll start. And then eventually be able to make your own content based on your preferences. And I don't know where we are from that, but I do think that's Netflix will have to do that at some point to remain relevant, because I don't know what percentage of prompts is making content right now in Grok or Gemini. We have to think it's at least 10, 20%. Making images, making short videos. You have to think it's a decent amount of the compute. So why wouldn't they play into that and make a tier that allows you to actually make your own content?
It's a good point, because Netflix spends so much money producing original shows.
Yeah.
And I would say 80% of them suck. That 20% is what keeps people subscribed, like Squid Game and is Stranger Things produced by Netflix? I'm pretty sure that's produced by Netflix. Yeah.
It is.
But the rest of it is just garbage. And if they could eliminate that 80% of spend, because they just give you, they move that spend to data centers and GPUs, and they just let you prompt it yourself. Also, this is a really good point, because Netflix is getting desperate. The podcast deal, my YouTube wasn't working for me the other day, so I actually went on Netflix because there was that YouTube outage. And one of the podcasts I like listening to about sports. I'm not a big sports guy, but there's one that I kind of like playing in the background.
Which one is it?
Rich Paul and Max Kellerman's podcast.
Oh, Kellerman? Okay.
Yeah. I saw it on Netflix, and I was like, oh, they signed a deal with these guys? And I started listening to it on Netflix, and I'm like, dude, I would easily just be watching or listening to this on YouTube, but it happened to be on Netflix. And I'm like, what if it wasn't on Netflix? I'm not going to sit down and freaking watch some movie. Like, it was just like 20 minutes I had in between work and meetings. So I turned it on. But I'm like, man, like, what if Netflix didn't sign that deal? I don't know how much money they paid to license that. YouTube paid nothing to get that content onto their platform. Those people uploaded it willingly because YouTube has the distribution. So to me, that was like, oh, Netflix is desperate. They have to pay money for this content that is zero cost to Google. And it's not to compare it to Google, but it's to show how unbelievably desperate the company is for them to have to pitch content creators on, or pay content creators on putting their stuff on the platform, because they just don't have enough shit for people to watch. Which was always my bear case about Netflix. I ended up being wrong in 2022 because it rallied so much, but who knows? Maybe AI reinvigorates the bear case.
Yeah, I mean, look, I'm one of the people that only has a Netflix subscription when there's something I want to watch on it. I always have a hard time finding something I want to watch on it. And I will be getting another subscription tomorrow for a month because of The Night Agent. And I happen to like that show, so I have no problem paying Netflix $20 to watch it. But I'm not going to, and I don't care about spending $20 a month. It's more the principle, because I get more value out of YouTube Premium. I get more value out of Paramount. I don't mind paying for those. I'm not going to pay for Netflix if I'm not going to use it. So I'm one of those fair weather Netflix people that when a TV series I like comes back, I'll get it for a month and watch it. And there's probably not many people like that. But man, I agree with you. It's if I don't have a reason to go on Netflix, I always struggle to find something I want to watch. YouTube, I'll find something within 30 seconds.
Yeah, and again, that's not a bear case for Netflix, because
it is not.
They keep getting subscribers, but to your point, if the AI stuff starts taking away a lot more attention, Netflix is going to have to adapt and let people create their own AI stuff. But I still think we're a couple years away from real AI movies. And
Probably.
yeah, it's not happening tomorrow.
The Claude stuff is fascinating, though.
Yeah, Anthropic is going to become a $1 trillion company and justify being a $1 trillion company. OpenAI is going to get to $1 trillion. I don't know if it's going to be worth $1 trillion, but Anthropic looks like, because they have enterprise revenue that's not going away. And so if they grow 10x again for a 4th year in a row, they're going to do 140 billion in revenue, which is probably not happening, but still, even if they do 50, like,
it is an incredible company. What you're able to do with Claude is incredible. The prompts that they're putting on X are so good. I'm really impressed at what it can do.
Did you see the video of Dario and Sam today?
No.
I got to show you it. How did you not see this?
I didn't have a second. I had no time.
So this is them at the India summit.
Okay.
You can see Dario and Sam don't know what to do with their hands. And so they don't lock hands, and like everybody else, they just throw their hands up.
Okay.
Because apparently they don't want to touch each other.
Okay.
Now, the funniest comment I've seen from this is someone was like, how is Sam Altman afraid to touch the dude? He's the gayest guy in That was kind of funny. That was funny. But you can tell they hate each other, bro. They wouldn't even lock hands. Like, there's real
yeah,
beef.
that's pretty crazy.
There's real beef between OpenAI and Anthropic.
Rightfully so. They're neck and neck competitors.
Yeah, but not even holding hands for this like ceremony. That's crazy.
Listen, they're at war, man. They are at war against each other. Just like they say in the Highlander movies, Amit, there can be only one.
Great movie.
Don't start.
It's a phenomenal movie. Did you see the headline around Nvidia?
About Meta and Nvidia? Yes. If you're talking about something else, no.
No, that headline is boring. We got a new one. Share my
Okay,
screen.
what's the headline?
Steve, you're hosting the show, right?
I see it. What's
Okay.
up?
Just letting you know. You got to be on top of your shit. You got to share my screen. Nvidia looking to invest $30 billion
Good.
in OpenAI.
I'm good with that. Invest $50 billion. Have fun. Please. No, seriously. This is bullish Nvidia.
I mean, all this money is going right back to Nvidia. So
all this money's going right back to Nvidia, and they're getting a stake in OpenAI on the balance sheet for shareholders. It's bullish Nvidia. I mean, this is a company that is likely to do $150 billion of net income in 2026. $3 billion a week. They can drop $30 billion on taking a slice of OpenAI and having it Nvidia become a holding company of tech companies.
So two things. Number one, I think Sam Altman needs to raise this money and get it over with, because right now the biggest concern is OpenAI isn't capitalized. They raised $150 billion. They're good to go at least for a year. I would say they have enough money to do what they need to do. Number two, I agree with you. I was seriously looking at Nvidia's earnings projections today. And I used your favorite website to go through it on Seeking Alpha. It, once again, feels pretty cheap. I mean,
scroll up for a sec. All right, so click earnings estimates, please. Thank you.
Oh yeah, this is what I was looking at. Yeah. This right here. This is getting ridiculous. I mean, if you believe they can grow to $10 of EPS by 2028, 18 times earnings, what's a reasonable multiple?
And keep in mind, that's not 2028, that's 2027.
Right, because of their calendar year.
Because they report on a calendar year that ends in the middle of January.
Let's put 30 times instead of 18 times. That should be reasonable for 60% EPS growth. That's a $300 stock. If we dare to put 40, that's a $400 stock.
And do me a favor, scroll down to revenue. So they're expected to do 213 billion for 2025, and then 327 billion for 2026. And that's the midpoint. Okay. The low, go to the right just a little. The low is 257, and the high point is 412. And how many analysts are there? 50 something, 60 something?
47.
60 analysts for this year. If they hit the midpoint at their current margins, they'll do about 160 billion in net income. Not even 150 billion, 160 billion. They have currently right now, without Q4 numbers,
I see what you did there.
60 billion. You like it. 60 billion in cash on hand. They have another 8 billion in long-term investments with 7.5 billion in long-term debt. This is a cash-rich company. Investing 30 billion off of the balance sheet today does not matter because that still gives them 30 billion in cash, which is more than their debt, and they're going to do 150 billion net income next year. So yes, invest in Opendoor. You give them 50 billion. Get more equity.
They should put a lot of money into Opendoor. I agree.
Not Opendoor.
You said Opendoor.
I did not mean. I realized it when you said that. I apologize. So OpenAI, they should do 50 billion, not 30 billion, because you know what? What else do you do generating $3 billion a week in profit? You don't even need to buy back shares at that point. I would rather, because the valuation is so low, freaking do a combination of buybacks and investing in companies.
Okay, before we stay on the Nvidia discussion, because I want to keep on it, I just want to show you this video. Speaking of Opendoor, the question after you watch this video is, does this make you want to buy the stock at all?
Look, let me just answer your question a bit personally first. I am very highly motivated to see Opendoor's stock price go up, right? My family is the most levered family in the world on Opendoor stock. My salary is $1, and unless stock levels see levels they haven't seen in years, I don't get paid. So I don't want you to take what I'm about to say the wrong way, but I just want you to let me say this. I don't manage the stock price. I manage the business and look at what we're building. Now, my responsibility is to create shareholder value. That's literally my job, to create value for shareholders whom I deeply appreciate. But I fulfill that. I fulfill my responsibility by not looking at the stock price every day. I fulfill it by building something people want and value. The stock price will follow. It literally always does.
You want to buy some Opendoor?
Are you buying Opendoor?
It kind of makes you a little motivated to buy. Hold on. I just remembered. I think you already know what I'm going to say.
I don't.
I just remembered when I asked you if we should buy Opendoor at 50 cents back in December of 2024. And
it was higher than 50 cents, and Chris and I both said no.
It was $1.25. We had a Zoom, all three of us.
Yes.
You guys were like, this is so stupid. No, don't buy it. And you guys would have been right. If
we were right for a long time until
we not for Eric Mother effing Jackson, he would have pumped our bag so hard. If we
so when did we have that conversation?
I remember it was December, end of 2024. We were looking for the next thing to do spreads on. The hood one worked out.
Okay. Yeah, you're right. So it was around $1.66, $1.60, that area.
Yep.
So in December, December 3rd, it was $2.16, and the end of December was $1.66. So it was somewhere in there. We said no. I said no.
And I agreed with you guys because you were like, Amit, look at the operating margins. I was like, oh, yeah.
And it went down to 55 cents throughout 2025, and then it started pumping. So we were right for quite some time. And look, if you had bought it at $1.60 and it went down to 55 cents, I don't know if you would have bought more or held. I mean, it could have went either way.
I probably would have sold. I would have been scared.
Because it went through a lot of shit before it pumped. Now, is it pumping on a warranted metric? I have no idea. I don't follow the company.
But
Do I
okay,
think
does that video make you want to buy?
not really?
Not at all.
Is the executive motivated because his compensation is tied to it? Yeah, that's great. His family being levered, I mean, that may be freaking a family of gamblers. I don't know. I mean, that just because your family is levered into it doesn't mean it's a good investment. I mean, a family can go to Vegas and not do well too. I mean, that doesn't make me want to buy. Is there a fundamental reason why why people are going to want to use Opendoor instead of getting a real estate broker? That's the real question.
I don't know anything about the business. All I know is it was kind of cool to see the CEO be that explicit about it. But then again, I don't really like the business at all.
I mean,
So
there's got to be a better way to do things. And I agree, there's a lot of money that's probably wasted. It's very expensive to hire and pay out real estate brokers. I get it. There's a lot of hidden fee, not hidden, but there's a lot of costs that go along with this. At the same time, you're making a huge purchase. I mean, what's the average home price in the US? 300-400 grand at this point?
it's 440, I think 440 to be exact.
Okay, so 440. I don't know that you really want to buy. To me, it's a lot different buying $440,000 worth of Nvidia stock than buying a house for $440,000.
Bro, apparently the average is 514 now.
Okay.
The median is 415, but the average is 514.
Once again, buying $514,000 worth of Nvidia stock is a lot different than buying a physical house for $514,000 that you really should get an engineer to make sure structurally it's okay. You should make sure there's no termite damage. You need to make sure the plumbing is good, the pipes are good. Like, there are things that you should be doing that I just don't know enough about Opendoor's business to know if it's worth it or not. Like, I would want somebody who knows the area. I don't know. Opendoor's been a very hard stock to invest in.
Okay, so back to Nvidia. So Chris was saying on my show today that he thinks the capex cycle is going to peak by 2028. He's not saying it's definitely going to happen, but he's getting nervous that it will, especially because of big tech being punished by the stock market. If it does, do you think this Nvidia story blows up in flames?
I think Chris may be correct on 2028 being a peak. I don't know yet. I would have expected Chris to say 2027 is going to peak. I think he's being concerned. I think he's probably in the ballpark of being right at this point, because I've continued to expand where I think it's going to peak. And I definitely don't think it peaks next year. I think we're going to have one more big build out. I just don't know if you do, think about this. If you do 620 this year, let's say they get to 750 in 27 and then 900 in 2028. How much more damn data centers do we need?
But so I think we can get out of Nvidia by the end of 27, early 2028 on that same premise.
Yes,
because
that's been my whole. Know that.
I agree, and I think everyone to an extent expects it eventually to end, and that'll be around probably hopefully close to 300. But do we doubt that even happens? That we get the 750, then the 900? Like, are you confident that happens for the next 2 years or no?
I don't think that that's something that can be assessed looking at 3 years. I think that needs to be assessed every 6 months and really looking what Taiwan Semi's doing. And is Taiwan Semi expanding their capex? What do the chip flows look like? I think there's several data points that we need to aggregate into it to try to make an educated guess. I think the biggest thing for you and me, and this is for everybody in the chat, only for Amit and I, okay? I would say Chris, but he's not here. So only Amit and I do believe that for us, we need to assess this very carefully and pick a point where we're not going to be mad if it keeps going up. Like if it gets to 7 trillion market cap, which I think it can, and we think, you know what, who knows, this is getting really shaky on the capex side, and we get out, we can't be mad if it goes to 500.
But see, I wonder if the market's going to be that kind by letting us have the opportunity to exit at 7 or 8 trillion, which is a double from here, essentially, before it goes up further. Because the entire bear case on Nvidia is that, like, capex stops soon, AI is still important, and then Nvidia becomes the biggest cyclical company on the planet and it collapses. But everything I've researched about the company, everything I've learned about Nvidia, everything, the robotics, everything tells me this party goes on a lot longer. This is a human species evolutionary change in terms of how we interact with the world for the next 10 years.
And the big problem is, just because capex may peak, that doesn't mean that maintenance mode won't match whatever the last year capex is.
Okay, let's play this thought cycle out. Let's say a capex does peak in 2 years.
Yep.
Can maintenance revenue even, like, so in that, let's say Nvidia peaks at 500 billion in revenue.
Mm-hmm.
Can they actually grow to 600 billion, 700 billion a year just on maintenance and CUDA? And
why? But let me ask you this: why do they need to? Why?
After growth, like, it has to keep growing as a company.
Or Apple didn't, and their stock price still went up because they did a ton of buybacks. Nvidia is going to be, let's just say Nvidia gets to 500 billion, capex stalls, goes into maintenance mode, okay? And Nvidia just stays flatline at 500 billion at a 50% goddamn margin. They're going to do 250 billion in net income. Let's say they do 200 billion of buybacks a year. I mean, that's a huge EPS increase without growing revenue. And I know that's not the story people are used to.
Yeah.
But that doesn't, but all I'm saying is that doesn't mean it has to go down. It may just not double. You know what I mean? They can still financially engineer increased EPS.
See, I think this is a good discussion. And then I'll listen to someone who's like uber bullish Nvidia 10 trillion. And it's a totally different, they're just like, are you crazy? Nvidia is going to be, it already is, and it will continue to be the most important company on the planet for the next. Like, there are two vastly different perspectives. One is that capex peaks. The other one is this will not stop, and anyone who thinks it's going to stop is out of their mind. I don't know.
I'm smart enough to know that I have no idea when it's going to stop, or if it's going to stop. I don't know. I don't have a crystal ball. I know what it looks like today and what the CEOs are saying for the next couple of years, but does it keep going? Maybe.
I think that's fair. I think there has to be a number for everybody where it's like you're going to start trimming and you just can't be upset about it. Because at the end of the day, Nvidia is not like Amazon or Google or Meta. It is cyclical. At some point, we're not going to need more and more data centers and GPU. Now, maybe that point is years from now. But there's going to be a morning where you wake up and it's like, Nvidia is not growing anymore. I mean, at least Apple can put out a new phone every year and, you know, somewhat get people to buy it. Like, at some point, maybe that doesn't happen for GPUs.
I have never seen a semiconductor company or a memory company not be cyclical, ever. This is the first time that it feels like there is no end in sight.
Exactly. Which is why it's hard to sell here.
At some point, that will end. Now, when that some point is, if it's 2 years or 10 years or 20 years, I have no clue. And that's why I'm saying that we need to assess this strategically and look at what the memory companies are telling us. Look at what Taiwan Semi's telling us. Look at what the hyperscalers are saying. And then draw those dotted lines back to NVIDIA and make growth assessments.
Well, this is why NVIDIA trading at 24 times forward is actually really attractive, because it's like, we know there's at least another year of massive capex spend. So for this stock to get up to 250 is not a stretch. Like, it just really isn't. Maybe it doesn't happen this year, but it's not a stretch to imagine it could, even if it stalls out at 220, 230, which is still a nice return from here. But at these multiples, I get why the market's giving it the multiple, because they're so afraid of the cyclicality, but it's like, we think Jensen's going to crush, and the hyperscalers already told us that Jensen's kind of guaranteed to crush. Then at least for another year, NVIDIA shouldn't be in too much trouble.
I mean, you got the CEO of AWS coming out and saying that they will be compute constrained for the next several years.
Yeah, I told that to Chris too, and he said the guy's just talking his book.
He's not. How can he? Everybody is pretty much saying that.
Yeah.
So,
I mean, even our boy Brad Gerstner added to Nvidia.
and think about this. I don't know if the guy's talking his book when you look at the RPO for all these damn companies. Like, that's the biggest thing. You have all this RPO, you need to facilitate it. The only way you facilitate is you have more capacity.
Yeah. Yeah, it's hard to imagine the Mag 7 cut on capex given how like imagine we wake up Q1 27 and Sundar's like, yeah, we're reducing capex spend. Like the fear there, as you've been talking about this as well, the prisoner's dilemma is like, then the market's going to start wondering, so is this AI shit not that important? Right?
I
Like
think that's the wrong question to ask. I think the question to ask is, did we just hit the wall where they have enough compute to do what we need?
Yeah, but if we do in a year, then that means all the shit these CEOs are saying right now, it's like over exaggerated, because in a year, if we hit the wall, it's like, you guys are talking about some multi-trillion-dollar build out.
Right.
Spent 650 billion and then maybe
if
another.
Sundar comes out and says that in Q1 27, Nvidia is going to 120.
Yeah, because he's not going to be the only one to say it.
Because he's not going to be the only one to say it. And I don't think, I mean, at some point, somebody's going to be first. I just don't know what that point is. And like I said to you when we got into Nvidia together, I want to be out of it before that happens. Now, do I think I can telegraph when that's going to happen? I have no clue. I'm really paying attention to all this stuff more than I pay attention to other things because I have a lot of investments in tech. And I think I'm going to be able to telegraph it. But at a certain point, I am throwing stop losses out there on Nvidia. At some point, when Nvidia gets to 250 or 275, if Nvidia does, I will be throwing stop losses at like 240 out there, just in case I can't telegraph it.
Yeah, it is hard to telegraph it, but again, then you talk to someone like Dylan Patel from Semi Analysis, and it's like Nvidia's 10 trillion, because it's like he's in the weeds of the technicalities of the models and all this stuff. And you hear Dario talking about compute's going to be trillions of dollars a year to spend. So I guess we're gonna have to live through it and see. But
I don't think Nvidia 10 trillion is a crazy number to get to, though.
I think that's expectation for most people, to be honest.
That's like 450 a share. I don't think that's crazy. Don't forget, most people have no idea what a market cap is. A lot of money, and there's going to be a lot of money just coming into it by proxy. And if we get a bull market for the next 3 years, if we don't have a recession, and if AI does create a lot of productivity and we see corporate earnings expand, what is that going to do? It's going to make more corporations want to get even more efficient, and they're going to have to utilize AI more. And this could be a party that just keeps going for a while.
Do you think we get a bull market for the next 3 years? What do you define as S&P 500 returns as a bull market? Like 15% a year? Is that bull market?
Yeah, I mean, look, obviously you have your technical indicators on what a bear and a bull market is, but I would say if the S&P is exceeding their historical average returns, you're in a bull market because you are exceeding the average returns. To me, that's a good freaking year.
So it has to be 15% because 10% is the average, right?
Yeah, I would say you're getting 15% by trajectory. It's not technically a bull market, but from wherever the bottom was, it probably is up 2025. So it depends on time frames. But I think 15% is safe. And if you think about it, I'm not seeing, unless we see massive job erosion, I'm not seeing a lot of stuff that puts us into a recession. And I do think what my friend who works at one of the big firms was saying to me the other day, it's something we've talked about. His call right now is tech is going to lag this year and it'll pick up next year. And this year is going to be the year of the boring companies. And he's looking for the companies with the biggest back offices, with the most headcount, and the most corporate space. is he thinks that they're going to be the ones that are going to be able to utilize AI, taking the 3 to 5 most repeatable tasks, figuring out how to automate them, and cutting huge amounts of staff and reps. If you have a company with 100,000 employees and you're able to automate the 3 to 5 most widely used tasks, you may be able to get rid of 10 or 15,000 people. And he thinks that that is going to expand margins and make them catch a bid.
I mean, he's probably not wrong.
And he thinks that this is going to be the year. Like, he's looking at financial institutions to really catch a bid, because he's like, you look at JP Morgan, you look at Chase, you look at Wells, how many of those tasks are repeatable? Like, do they need that headcount, especially in the age of AI, with them being able to deploy unlimited amount of capital to an open AI or to a Anthropic to build whatever they need to build to automate those repeatable tasks? He's like, at some point, you have to think that those companies, a Coca-Cola, a Walmart, like these companies with huge headcounts, are probably going to be able to get rid of people in back office and expand margins because their SG&A costs are going to go down.
I agree. I do think politically, though, it's going to be tough for Coca-Cola to be like, you know, especially those blue collar jobs, like for them to just
and I'm not saying all jobs. I'm just saying that companies with large employee bases, they're going to be able to figure out efficient. I mean, we saw it in the 2010s with SaaS. Okay, this is nothing new. And I remember, look, finance departments with 100 people, 150 people, people I know that worked at other companies. Over a 10-year period, those companies are half because processes just got automated with enterprise resource planning systems. It's not crazy to think that we see more automation in HR departments, more automation in finance departments, more automation in payroll departments. It's not crazy to think that we see that.
Yeah. No, I agree.
And then you add robotics into it.
Well, that's the other thing. The robots, maybe that's what keeps Nvidia going.
Well,
Nvidia, seriously,
you have to think that full self-driving robots is going to help Nvidia, AMD, and Broadcom with chips.
Yeah, I mean,
there's a lot of reasons why Nvidia can stay going. It's not just AI and data centers.
At least for the next 2 years.
Yeah, I'm not saying indefinitely, but we're really at the front end of robotics and FSD.
This is why we need Elon to ship these robots, bro. Like, whether you own Tesla or not, you need him to prove that it's a viable product that can, sell millions of units a year. So that's.
I mean, the real question is, do you not look at when are we getting out of Nvidia and say, okay, what are the 5 AI companies that are going to run this world for the next 20 years and just stay with them? Because the one thing that I've learned over my life is technology does not stand stagnant. It never goes in reverse. It always advances. So we're never going back to a world where we have CD players and Walkmans and cable TV, traditional TV. We're never going back to that. Everything's digital. We're not going back to dial-up modems. Eventually, you're going to have robots. Eventually, you're going to have FSD and whatever comes after that. So the question is, what are the companies that are going to control that? And do we just stay with them through the ups and downs?
I think you have to, right? Amazon, Google, you just have to believe these are the companies that, now again, they're not going to be the same type of alpha as finding some small cap, right? But like, you can sleep well at night owning them for the next 10 years. I mean, can we imagine a world without Amazon or Google?
No.
Or Meta? There is no world without those companies. There's zero world without those companies.
If you got rid of Meta tomorrow, do you have any idea what therapy offices would be like for fucking you talk about cold turkey, you talk about going through a withdrawal from crack. What do you think people are going to go through a withdrawal without freaking Instagram?
What do you think of Zuck's testifying for this social media mental health thing?
I didn't even see what he said. I haven't looked at it.
Yeah, I mean, it wasn't live, but he is being grilled pretty heavily on Meta's impacts on social health.
I mean, here's the thing. It's not Meta's problem. They're not making the content.
I think that laissez-faire view is what Zucks would take as well, but
They're providing a platform. They're not posting content. Okay. Everybody else is posting content and people are deciding to watch it. I mean, in all seriousness, how is that any different than somebody watching 10 hours of TV a day?
well, the pushback would be that Meta controls the algorithms and they can get you wrapped into these rabbit holes and radicalize you and this and that. And yeah,
It's a more efficient way of finding what you want, but then people are just going to do other dumb things also. Like if you do something to Meta, people are just going to find other ways to escape reality, whether it's watch TV, whether it's sleep. I mean, look, just because they have an algorithm that works doesn't mean that there weren't things before that people use as escapes. People would listen to records nonstop thinking about escapes. People would do drugs. I mean, this is just the newest form of escaping reality.
10 hours of Stephen Amit. Yeah, that's true. Yeah, I mean, the point is, if you got rid of Meta or Google or Amazon or Microsoft, the world falls apart. Like it can't function without those companies, which is why it's so weird for anyone to be bearish. You could be a little bearish on the valuations, but you can't be bearish on those companies. Those companies are countries now, bigger than most countries.
I would say that in addition, you think about the younger generation. I mean, and not your generation. I'm talking about 8-year-olds to 12-year-olds to 14-year-olds. Okay. They're growing up. They don't know life any differently. Okay. Are they going to Walmart when they become 20? Or are they ordering on Amazon?
Well, that's what Dan Ives said on our pod, right? He thinks like kids being born today are not going to have driver's licenses.
I think that they'll have driver's licenses to a degree. I don't think that they're necessarily going to have to drive.
Do we think in 20 years you're going to need a driver's license?
Oh, you're not going to need one in 10 probably.
Dude, today I was coming back somewhere for, it was like a 40-minute drive. I got to the parking lot and I was just like, how did I get here? I did not touch the steering wheel once. I was daydreaming. Like when I mean deeply in a daydream, I could have basically been sleeping. I was daydreaming so heavy. And when I got to the parking lot, I'm like, how did I get, like, I was so in my mind. And I was like, oh my God, this car just took me for 40 minutes. I didn't even touch it.
I'm with Chels on this. Do they ever have adult entertainment companies testify? That's really who needs to be shut down. I'm with Chels on that.
Yeah, I mean, it is kind of crazy that they let those companies get away with the content that they're putting out and Meta gets investigated.
And I have no problem with if a man or a woman wants to put out that content. I don't care what people do in their private lives. I don't care about that stuff. I have a very big problem with sex trafficking, and you have no idea if people are being forced to do these things.
Yeah.
That's what I have a problem with.
Well, it's also good political theater if they can grill Mark Zuckerberg, you know?
So I would much rather see them going after other things than freaking Instagram right now, because I think that there are many other problems. You're right, it's political theater. But I got news for everybody. It's not going to freaking matter. Want to know why? Ask me why, Matt. Why is it not going to matter? Ask me.
Why?
Who's Zuckerberg's newest board member?
Dana White?
And who's he best friends with?
Donnie T.
There you go.
Yeah.
At least for the next 3 years, Zuck's got a freaking golden parachute.
Yeah, that's another thing Chris was saying today. It's like Donnie T. Well, Trump was bragging about the stock market today. And if job growth is really bad right now, just objectively, it's not good. Affordability, Trump says it's good. I think a lot of Americans would disagree. The only thing that's really good right now economically is the freaking stock market. And if that goes down, he has nothing to brag about. Like there's just nothing he can point to numerically. Like the whole reason they're bragging about Dow 50K is because they got the Dow to 50K in a year. Like if that thing goes down to 40K,
I mean, you can talk about the price of gas, you can talk about the price of eggs, but
the price of gas is about to go up because oil prices are going up with this whole Iran stuff. Now maybe but like the point is that's
so I live in an area that is one of the more expensive areas for gas. Regular is still under $3 a gallon.
Look, I hope it stays low and it continues to stay low. But the point is, if gas prices is the only thing you can point to as affordability,
I agree.
I mean,
100%.
I don't know how many American people will believe that. But the stock market and 401ks you can point to. That's tangible. People can feel that. If that goes away, it's not going to be pretty.
No, there is a big affordability problem, but it's not necessarily prices, it's wages. Because under $3 a gallon for where I live is freaking great. $2.98 a gallon for regular in New York City taxes is freaking great. Okay. Crude at 66 is not horrible. The sweet spot for gas really is that 55 to 70 range. You start getting out of that 70 range, you got problems. So I don't think that this is really going to creep in hard. Maybe it goes to 310 in my area, 320, which isn't crazy. It's nothing like it was. I mean, the problem is houses. The problem is taxes. There's a lot of problems with affordability.
Interest rates.
Interest rates.
That's another reason we can't be bearish, dude. These rates are coming down. They're going to come down. Like, Trump is literally picking the next Fed. If they don't come down, I think he might actually like lose his mind. Like, he's picking the guy because the guy told him he's going to lower rates. It's that simple. And as long as the economy doesn't crash, which is all the capex and everything, then as rates come down, asset prices, they tend to benefit even without QE. It's another reason to just stay steady in the midst of the volatility.
Look, they're going to get rates down enough. Everybody has to remember something, okay? They need to get rates down. They need to sign the crypto bill, and they need stable coins to take off because then, most likely, you'll have significantly lower rates. You'll be able to refinance debt and shave hundreds of billions off the national debt. That is something that trust me, they have in their minds. They're trying to figure out a way to get it to a point where they can shave money off of the interest payments the country is making.
Yes, and that would really be the golden age.
Yeah.
Like, if rates come down, house prices go down, gas prices stay down, he somehow keeps job growth up because the revisions means that like we're at basically negative job growth. If he somehow kind of fixes that, which just means more private investment, and the stock market keeps going up because of asset prices, it should be a really good 2026.
The job market's going to be really hard if you have high rates. Like I'm so serious about this. Interest rates cannot be more than 2.5%. You need it there because you have to make the cost of capital low enough that small businesses are willing to borrow to expand. Because I think large businesses are going to cut jobs. I really do.
Yeah, if we start seeing AI cut jobs and rates are, that's why, dude, the Fed minutes yesterday, some of the Fed presidents were like, we need to think of hiking, like word for word. And I'm just like, I'm reading this shit and I'm like,
get rid of them all.
Like, do you guys not realize what's happening with AI?
Get rid of them all.
Is it just a joke to you? Because when jobs start going down, because it's inevitable, companies are going to fire people and be more efficient. We're going to need to make sure these rates are not at 10%.
Rates need to come. Look, you want affordability to happen, rates have to come down. You need carrying cost on credit cards to come down. You need to be able to borrow to build. You need to be able to borrow to build businesses. You need the home builders to be incentivized to build more homes.
Dude, and AI is obviously deflationary. Like, give me one good argument why AI as a concept is going to create inflation. Everything about it. More productivity, more efficiency, less jobs. The cost of goods and services should go, like, instead of hiring a graphic designer, you use Gemini for free to come up with a thumbnail. Everything about it is deflationary. Why are we so afraid about inflation? The Fed presidents yesterday are literally complaining about inflation. I'm like, bro, I thought thought you guys said inflation is like not as big of a deal. Like, yeah, it's a concern, but it shouldn't be like a hike type of concern. Talking about hiking? We're talking about hiking? Like,
You'll kill the economy in this environment. You will kill it.
I am wearing slippers, not boots, because I can't go on a hike. Like, what are we talking about? Hiking?
I like that.
Gotta be out of your mind, bro. Could you imagine if we hiked? What I would pay a lot of money to see the Trump Truth Social tweet.
Oh man, he'll lose his
Hypothetical
mind.
hiked.
But it also goes back to we need to fix things in society. I am sorry, medical doctors should not be coming out with $300,000 to $500,000 worth of debt. We need doctors, okay? We need certain professions. Unless you're telling me that we're not going to need doctors anymore, and Intuitive Surgical is going to build general practitioners and every type of surgical robot that you need, that we just don't need them anymore. You have to make it so people want to become doctors. I mean, in this day and age, with the amount of financial knowledge that we have, why would anybody want to take $300,000 or $500,000 out in loans to get a job making 250 grand a year, where they're just scraping by because they're spending? And I'm going to make up a numbers. I have no idea what it would be, but what is that monthly payment on debt? 5 to 10 grand a month, paying back student loans. I mean, the math isn't mathing with some of this stuff.
Well, it's also a problem with the United States' entire system of healthcare, and those are problems that are hard to fix.
Well, I got a way to fix healthcare. Don't allow frivolous lawsuits when somebody's trying to save your life if something goes wrong.
I agree.
There's a reason malpractice insurance costs an arm and a leg. Like, if you get into a car accident and something happens and the doctors aren't able to save your life, I'm sorry, but I'm going to leave it at that. But I'm probably going to put my foot in my mouth. But we need to really overhaul the amount of lawyers that can just freaking. Yeah, I'm not going to finish that thought. There's a lot of things that need to be overhauled with that will fix a lot of things. Low-hanging fruit that will be very easy to fix.
I don't disagree. I do not disagree at all. Yeah, I think there's a lot of different ways that 2026 ends up being bullish. It's just kind of crazy. We're in this John Deere trades at 50 times earnings, and Amazon's at it is. I wonder when that shakes up, but for now, we get some cheap Amazon.
I don't think. I don't have a problem with Deere being so given such a multiple. I got a problem with Walmart and Costco, because I can make the argument all day that John Deere equipment is utilizing. I've actually watched some of their videos. It's pretty awesome.
Yeah, but have you seen their EPS growth?
I have looked at their numbers, but I have looked at their equipment videos, and it is pretty interesting what their equipment is able to do. And I think they're going to be able to upcharge for services from the equipment. Okay, there's a ton of shit their equipment does that's not just equipment.
They are growing negative EPS right now, 25% year over year. Operating profits are down 59% year over year. Like, I think it should have a multiple, and there's an AI narrative. But dude, nothing in the numbers is showing up yet to prove that, outside of 13% sales growth.
Yeah, the EPS growth for the next 2 years, though, is phenomenal. This year is a build year for them.
Okay, so then you have to believe. I mean, at that point, if we can price in that forward growth, we're just not giving that to tech then.
Like, yeah, this year is not good for them, but next year, 30% growth on EPS.
Yeah, look, that's fair. But the problem is for big tech, their next year forward growth is also pretty damn high.
And even Deere at 34 times isn't a crazy multiple when you have companies trading at 60 to 100 times that are way worse than Deere.
Correct.
Like, we're acting like Deere is trading at 80 times earnings. It's not. Is it expensive this year? Maybe you could say it's expensive versus the S&P, but Deere is probably one of the greatest companies overall, and trading at 34 times.
Again, should the stock be up 42% this year?
Obviously, people are buying it. They're driving it up.
But I wonder if people start saying, okay, we could pay that for Deere, or we could pay XYZ for Microsoft, and that flips. Or maybe Deere and Microsoft both go up together. I don't know.
Listen, I think that the big tech companies are significantly undervalued. I don't know how overvalued Deere is because who's their competition?
Well, that's a good point. And Caterpillar also has shown massive growth. And
Caterpillar is another company that controls the market. I mean, the U.S. is built on farmland. Okay. John Deere runs farmland. So I think that they have a lot of growth because of AI, and paying 34 times, if you're paying 34 times for this year's earnings for a company that is expected to trade 21 times in 2028 doesn't sound like a bad deal. That's a lot of earnings growth.
Right.
So I think there's worse companies you can invest in than John Deere.
Are you buying PayPal?
I didn't. I am highly considering it. I don't know. There's a few things I'm leaning toward doing. I don't know what I want to do. PayPal is so damn tempting. And I think you and I were talking on the phone yesterday. Amazon should buy fucking PayPal.
That would be that FinTwit would blow up.
FinTwit would go nuts. The market would go nuts. It would be a strategic move for them.
It would be kind of fun, though, to see someone like Amazon buy PayPal. Like, to just see a company that big take PayPal out of its misery.
Well, the question becomes, if Amazon was to buy PayPal, how much would they save on processing costs by owning the rails?
But I don't think they need PayPal.
They definitely don't need it. They're doing fine without them. The question is, does it make them more efficient with payment processing? And does it save them enough money where the deal just becomes, we buy it because we're going to make the money back on cost savings over the next 5 to 10 years, and we keep it as a payment company, and it gives us free cash flow off of that to offset some of the capex costs. A fraction, but some.
No.
I don't know. Nobody needs PayPal. I mean, look, if freaking Visa or American Express or MasterCard haven't bought PayPal by now, there's pretty much no reason for any company to buy them.
No, I agree. I think you're right. I think there's a lot of other companies that are cheap compared to PayPal. But PayPal is cheap.
PayPal is extremely cheap. The problem is, I just don't know if the market sentiment is going to change on it. And I think from a value proposition, I have never seen a company trade cheaper that is still growing. That's the problem that I wrestle with. It's trading at less than 7 times free cash flow. It's trading less than 7 times freaking EBITDA. I've never seen a tobacco company trade like that. And this company still to this day has never generated negative year-over-year revenue growth. And they're not expected to either. At what point does the market take them to 25 billion and have them trade at freaking 4 times free cash flow? I don't think so. They could, but I think it's becoming so overdone that they have nowhere to go but up at this point.
I felt like that at 60 though. So
did I.
I think we got to give it one more quarter to see if it actually can pull through.
I felt like that at 62. I've never seen a company this cheap that's still growing. It's mind-boggling. I don't know. It's one of the things I've been thinking about. I'm getting ready for Zeta and Nvidia earnings next week.
Zeta's next week, right? Yeah.
Yeah, Tuesday. I will be covering it live.
I might be live too. We could probably do it together.
All right.
Yeah, that one has gotten hammered in the SaaS sell-off, but they should put up some pretty good numbers. I mean,
I'm going Team Zeta.
if they take that thing to like $10, bro, $11, I mean, okay.
$10, I'm doubling down.
I think everyone's
unless there's a breakdown in the numbers, I will double down.
I think the numbers are going to be phenomenal. It's just, I wonder, but AppLovin, remember, fell 20% after earnings. Now that's recovered fully, not fully, but a decent chunk. So I think you could expect anything. The numbers are even kind of good.
I mean, I don't think Zeta is going to have a bad quarter with the amount their CEOs all over X right now.
Yeah.
I don't. He's acting like he wants to have the earnings call now, with how excited he is about stuff.
Well, the numbers are going to be good. I really don't think the numbers are going to be bad. I wonder if the market will give them the benefit of the doubt, which, given how cheap it is, I don't think you need to have a benefit of the doubt. But I agree. Yeah, I think it's going to be like a Figma type of quarter where the stock's down so much that it jumps.
I agree. I mean, we got a couple of earnings. I mean, Salesforce is going to be very important. Adobe is going to be very important.
Yeah.
I mean, those quarters are going to dictate whether the SaaS names as a whole continue to sell off or stabilize. I think everybody's waiting to see what they say and what they guide for.
Yeah, and if Salesforce sucks, they suck, but companies that aren't getting commoditized by AI, that are SaaS, that put up good numbers, they should still continue to win, regardless of Salesforce,
Yeah, when is Salesforce reporting? They're reporting 225. They report next week also.
With Nvidia.
So it's going to be really interesting. They're a cash cow, and you can not like the company, you cannot like the product, you can't dispute they continue to grow, and they're extremely profitable.
Rocket Lab's on Thursday.
Rocket Money.
Rocket Lab and Duolingo are the same day, and then Intuit, and then CoreWeave. Whoa, Thursday is going to be wild. Rocket Lab, Duolingo, CoreWeave. CoreWeave, everyone thinks, should be higher because of Nvidia partnership. Rocket Lab, everyone loves. Duolingo, everyone thinks has bottomed, potentially. Intuit's a software name that's been getting hit heavy. You got NP that day. That's the rare earth. You got Rocket Money the same day as Rocket Lab. I'm just seeing.
Yeah.
You got Zscaler for the cybersecurity names. Then you have Dell that day. Thursday is going to be crazy.
So I'm glad you said cybersecurity. I was with somebody today who is in the field. I'm not going to say where or anything. I was with somebody that was in the field. That's in the field currently. And he was talking to me about how people are getting around the guardrails on Claude, and they're able to write malware for certain things.
I heard about this, actually. Yep.
Okay. And this is somebody who is, and you know me very well. How often do I tell you I spoke to somebody that is an expert in the field?
Literally every hour. I get a text every hour like I just spoke to my expert in banking, spoke to my expert in semiconductors, spoke to my expert in Ethereum, spoke to my expert in veal, spoke to my expert in medium rare. Anyway, go ahead.
Anyway, I literally never say that, okay? And I spoke to somebody who was an expert in the field today that I was with, and they were telling me all these things. And we started talking about cybersecurity. Cybersecurity is going to be so much more important this year than it was last year. It is going to be so much more important next year than it is this year because of how advanced the attacks are going to be. And I think we're going to continue to see consolidation. And I think that we're going to continue to see more technology budget allotments towards cybersecurity because hackers are going to get that much better.
Yeah, I mean, Dan Ives was on our show. He laid out the thesis. I think it was pretty spot on. It's you have to be a genius to figure out that you're going to need more security in the age of AI.
100%.
Like that, the Palo Alto CEO was pissed off when he saw his stock down 10%. And he was just
Dude,
like, he was literally like the mark. He's like, these are bots after hours that don't understand our numbers.
it's at 151.
I think it's actually worth a look.
We talked about this a day or two ago.
It's worth a look. Like, it's not the fastest growing company in the world, but it's worth a look. Now, the PE is still kind of high. I don't know if we just ignore that part, but what's the forward on this? Let's see.
I have it.
Okay, pull it up. Let's see. Anyone own this? Let us know. Ah, dude, the PE is 40 times next. That's again, this company's them and CrowdStrike have always traded at a premium.
CrowdStrike's very expensive.
Yeah, but dude, this thing doesn't even get to 20 times until 2031. That's the issue. These names. Look, can we look at crowds also?
Yeah, well, I'm going to pull up in a sec. But I mean, they got good revenue growth. The question is, do these numbers reflect the CyberArk deal?
I don't know.
I don't know.
It's a good question.
So remember 41 and 32. Remember that. Okay. Let's look at CrowdStrike.
CrowdStrike's going to be some stupid numbers.
It's a crazy.
It's going to be dumb.
It's a crazy multiple. Yeah. Oh, 111 times. That makes sense.
It doesn't get to 20 times until 2033. This is why when it fell in freaking
On the Microsoft outage.
Yes, I bought it, and a lot of people just felt like I was chasing. And from my understanding at the time, I was like, guys, this is the cheapest the stock has been since IPO. Like, you're not going to get a better deal here.
It was literally here that happened.
Yeah. Now I ended up selling it at like 310, but I didn't have that much conviction. But the point is, that was your opportunity. It was a freaking Y2K moment to buy this thing.
And you know what this proved right here? You know what this proved? Even though Microsoft went down because of this, causing corporate email and cloud storage to go down, nobody got rid of fucking CrowdStrike.
And here's the thing. I remember for about a week, because this really annoyed me, I was getting into debates left and right, like in my personal DMs with people that were like, CrowdStrike's dead, it's over, you're done, yada, yada. Like, people were upset. Some people I respect that work in tech started messaging me saying, Amit, I think you're out of your league on this one. This one is just, and I'm like, dude, I'm not the smartest guy in tech by any step, but I'm like, the world shut down because their product went down for 7 hours. I think it means they're freaking important. And then the revenue hit, George Kurtz on the next quarter was like, it's a 60 million revenue hit and we'll be fine. And now they're back to 400. Like, I think any AI doomerism around cybersecurity is insane. Absolutely insane. But the multiple's up there, bro.
The multiple is very high. And the question becomes, if CrowdStrike can sustain that multiple, does Palo Alto expand its multiple?
Well, the problem is with the reason people pay a high multiple is for growth, which goes back to the Palantir conversation. Like, they're growing freaking 70%. You're like, even though it's a pretty big multiple, you're willing to pay that. These guys aren't growing anywhere near those levels on EPS or revenue.
Yeah.
So why do you, at that point, you pay it for exposure to the sector, which begs the question, is it worth that multiple just for exposure?
I don't know. I mean, there's so much more money that's going to be spent in the sector. The question is, who's going to get that new money? Is it going to be CrowdStrike? Is it going to be Cloudflare? But Cloudflare is on a different side of it.
I don't know enough about Cloudflare, but they are not necessarily cybersecurity.
That's what I'm saying. They're on a different side of it. And then you got companies like Fortinet and Cisco that are dual because they have the hardware with the servers, the switch, well, not the servers, the switches, the firewalls, the access points. And then they also have the services and the security with Umbrella, everything else. And then Fortinet, same thing. They have the hardware and then they have the Fortinet services. So are companies like that going to get a bigger piece of the pie? I don't know.
Yeah, the multiples are aggressive on the
What's the cybersecurity ETF? Do we know?
hack, HACK. Hack.
HICK. Let's see what the holding.
That's another easy way to get exposure, but I think Palo and Crowd should be simple buys
All right.
without thinking too deeply about it. It's just, yeah, the multiple's up there.
So that's it. I would have thought this would have looked much different. Broadcom and Cisco are the two biggest freaking holdings in Hack.
Why is Northrop Grumman in there?
And why is General Dynamics in there?
Okta, I get.
I get Palo Alto, Fortinet, CrowdStrike, Cloudflare. I get those.
Check Bug. Bug's another one.
But that's interesting. Cisco's their second biggest holding.
No wonder this shit's been not doing the best.
Global X Cyber, this thing's been falling off a freaking cliff.
Well, all of cybersecurity has been stuck.
Fortinet number one, Akami, I don't know much.
This is
about
more reasonable, I think.
Checkpoint, CyberArk, Palo Alto. So
Dude,
if this deal isn't done, this deal's got to be done because you can't click on CyberArk.
Google did buy Wiz for $32 billion for a reason, and they paid. Hold on, let me make sure. I think Wiz was doing 500 million in revenue. Wiz was 500 million, so they paid.
Big
I mean,
multiple.
they freaking paid. Is that, if I'm not wrong? Yeah, 64 times earnings or sales. They paid 64 times price to sales to get Wiz.
And does that establish what these companies can go for? Is the question. Because if they were willing to pay that for Wiz, wouldn't Palo Alto be worth way more than what the market cap is suggesting?
Dude, that's crazy. They paid that much freaking money for freaking. Yeah, I guess that sets the floor for the cybersecurity names to an extent. That's a lot of. That's crazy. So, like, what did they see that made Sundar that excited to pay that?
They're probably going to have their engineers work with Wiz's engineers and embed it into their. If I was them, it'll be embedded into Google Cloud. It'll be an upcharge service, so you keep everything in network. One bill, commodities of scale. Eventually, you have to think that they're going to come out with a $4.99 product for retail. And when I say retail, I mean anybody who uses Google One, Gmail, that type of stuff. So they're probably looking as they're going to build their own cybersecurity to layer on top of all their services. That's why they do it. There's no other reason.
Yeah, I guess.
Could you imagine what that would do? Think about this. How many people have Gmail and utilize Google Docs and utilize all that stuff? Imagine if they came out with like $3.99 or $4.99 a month for cybersecurity for all that stuff, because we get to a point where you need it.
I would hope I don't have to pay extra to make sure my emails are secure.
No, but think about it. Is anybody going to bat an eye at $3.99 or $4.99 for that?
Why do I have to pay to get? Google should make sure my emails are secure. Why should I be worried about? Like, I should be worried about Gmail leaking my emails at this point? Like,
I could see a world where that happens, sir.
yeah, I could see a world where Sundar gets paid big money to make sure that doesn't happen too.
Or he gets paid big money to make sure it does happen. That way they can upsell you on a $4.99 cybersecurity package.
Dude, if they said, hey, pay $5 to protect your emails, I'm like, what? My emails aren't protected? What? Like, what the fuck?
I mean, shit, I already pay $19.99 a month for fucking Google One. If they told me it was $24.99 instead, I would just say, okay. Because I need the space. I need the space in my email. I need the space on my Google Drive.
I'm not cheap, but I would be questioning why I have to pay for security.
But you're paying for Google One, correct?
No,
There is no way that you are able to.
Well, no, I pay for upgraded storage.
Right, that's through Google One, isn't it? Or you're just paying straight storage?
I think it's just straight storage.
Okay, but yeah, you're paying something because there's no way that you're able to do everything you do without paying for an excess layer.
Yeah, I have like 2 terabytes of storage.
Yeah, so I'm using Google One because I'm getting Gemini and everything else in there. If they told me it's a couple bucks more a month, I mean, that I wouldn't even think twice.
Dude, their margins on storage must be insane, right?
You would think.
Like 2 terabytes of memory for Google to host my pictures and emails must be like pennies to them at scale. And I'm paying what, $10 a month for it?
Think about how amazing of an idea it was for them to have Google Cloud. Think about the fact that they don't have to go outside for that exact reason.
Yeah. All right.
Completely vertically integrated.
I think we call it here.
Yep, that's fine. All right, everyone. Thank you for hanging out with us.
Tomorrow's Friday.
Tomorrow is Friday, Amit.
I forgot. Tomorrow's Friday. If we have a decent day in the market, we survive the week. We survived the week. Because last 2 weeks, we didn't survive. Last 2 weeks, we went down heavy on today, Thursday. So if we get through tomorrow, we survive.
Can we end on a Matt Money tweet?
Yes, let's do it.
All right, Matt Money with an incredible tweet to end out the night.
Oh, the Supreme Court ruling might be tomorrow. Yeah, that's true.
Here we go. Michael Burry is upset about Palantir's use of jets. Just wait until he hears about Anthropic.
Oh my God. That is the funniest guy in the world, bro.
I would like to host, okay, Michael Burry. I know you're not watching because you hate us, but I'd love to host you and the White House quant having a conversation. I will not say anything. I will just ask the questions and shut the hell up and let the two of you go.
That's the best thing ever. Oh my God.
We're going to end it there, everybody. Thank you for being here. Really appreciate it. Please make sure you tune in to Amit tomorrow morning and tomorrow afternoon, and then I will be live tomorrow night. Enjoy the rest of the evening, everyone.